Dr. Raj, you want to start?
Yep. Uh, Good afternoon, everyone. Welcome back to Computing Capstone Seminar Series. Today, our distinguished guest is Spencer Fan. He is the founder of Bevo, a crypto quantitative trading firm headquartered in Singapore. He has around 16 years of experience in global financial services. He developed his professional career with uh, Nomura Securities in New York, Bain and Company in Singapore, etc. He graduated from MIT and NUS Singapore, and he is also the regional chair for MIT undergrad admissions, responsible for interviewing top high school students from Vietnam. And today he is going to talk about blockchain. So the title is Blockchain Biggest FinTech Opportunity of the Century. So with that, I would like to hand over the session. Please.
Great. Yeah. Uh, Thank you, Professor Rajendra. Thank you, Geraldine, for inviting me to this seminar. Uh, I myself is an NUS alumni, so I'm very happy to share my past experience as well as my understanding of the industry in regards to fintech with current students of NUS. In the past, my team has hired students from your program before, and we had very good experience with students from NUS. So in the future, as our team expands, we hope to be able to recruit more students from NUS in the future. Right now, we are faced with rapid evolution and innovation in the fintech space. In the past, I have shared my understanding of cryptocurrency and blockchain technology with students from NUS. Today, I will talk about prediction markets, which is another hot area of innovation originated from the United States. And in the future, I believe it's going to expand globally. The areas and industry sector that I will be talking about are usually quite frontier and cutting edge. I believe this is beneficial to the students as they embark on their professional career. Let me share my screen. If there's any questions, please feel free to share in the chat, and I will reserve some time for Q&A at the end of the presentation. Okay, let me share my screen. Share. Okay, great. So prediction markets is a relatively new concept in the space of trading, which is the area that I focus on for my work. I would say it's in the intersection of trading and fintech innovation, which is the reason why I picked this topic for today's presentation. We are about to launch a user-facing website called superweb3.org. The name is inherited from a prior business which I run, which help fintech startups to raise capital from global investors. In the future, this company will focus on providing trading bots in the cryptocurrency and the prediction market space to global users. First of all, the idea. So the idea of prediction markets came from a well-known founder in the blockchain space called Vitalik Buterin. He's a very famous person in the industry, and he founded the number 2 blockchain in the world called Ethereum in the year of 2014. The idea about prediction markets came from this truth-seeking protocol called shilling coin. The idea is basically people can coordinate naturally without communicating. So basically, people communicate in the framework of code. Yeah. First, it provides an incentive by asking a group a question and everyone submit their answer. It's like similar to in a classroom where the professor asks a question and every student can submit their answer. And there's a reward for answering the question. And as long as the answer is within the 25th to the 75th percentile, the students will be rewarded. And anybody whose answer outside of the 25th to 75th percentile will get penalized. For example, if every student invests $1 into this question by answering the question, and by just to get, let's say they want to guess the temperature of Singapore tomorrow, anybody whose answer falls within the 25th to the 75th percentile will get, proportionally more money than $1. And anybody whose answer is outside of the 25th to 75th percentile will lose their $1. So this way, it is an incentive for every student to vote for the true answer. That's where the others will converge. So that is the logic of the shilling coin. And that is the fundamental idea behind the business of prediction markets. So basically, in a nutshell, shilling coin uses greed to force people to tell the truth. The other well-known person behind the idea of prediction markets is this economics professor in the United States. He came up with this idea of futaki. So, if you're familiar with the word anarchy, or basically it's a form of governance. The basic idea is to vote on values and bet on beliefs. So let's say there's a hypothetical country in the world where the policies are made by citizens voting on the policy, and every citizen is supposed to vote on the grand vision of growing the GDP of that country. And when they vote, they must put their money behind their vote. And two markets will be established for every vote. For example, market A would be GDP grows if we pass this bill. Market B will be GDP grows if we reject this bill. And the policy discussion or policy debate will be automatically executed if the citizens vote that the market predicts higher success for pass. For example, market A has more votes than market B for passing, then the bill automatically becomes law, and there's no human intervention. So this is the fundamental idea of prediction markets. So futaki replaces debate with markets, wisdom of the crowd with skin in the game. Right now, there are a lot of in global affairs. The financial market or investors would actually look to the prediction markets just to have a hint of what the crowd is thinking. For example, the current Iranian conflict. Previously there was the United States presidential election. Donald Trump had a pretty high chance of winning even before he actually won. So that's how the prediction market became really famous and came out of the smaller scale of niche area and become a much more well-known marketplace. So the leaders in the prediction market, there are two of them. The first one is called Kalshi. We call him the regulated giant. The company was founded in 2018. This is actually the year that I entered the cryptocurrency and blockchain space. There were lots of startups, in that year founded, but I think maybe more than 95% of the startups have already died, and the ones that survive, became winners. Right now, as of December 2025, this company has a valuation of $11 billion. And it is regulated by the CFTC. This is the Commodities Futures Trading Commission of the US. The business it has right now has a very strong moat, and it has built strong relationships with some partner companies. For example, I'm sure many of you have heard of Robinhood. You know, Kalshi has a very strong partnership with Robinhood. This relationship contributes over 50% of the total betting volume on Kalshi. Another competitor of Robinhood is Webull. They integrate prediction contracts into their business from Kalshi, which also contribute to users to Kalshi platform. Drive Wealth is another company. It's also a brokerage as a service. They integrated the Kalshi prediction market function in their product so that when other brokerages globally uses Drive Wealth software, those clients can offer prediction market service to their users. So these relationships bring users, bring the betting volume to Kalshi. The second category of partners it has is the partner that buys data from the platform. In terms of data, we're primarily talking about financial data as well as news data. TradeWeb is an institution-focused data provider. It sells these Kalshi-generated prediction markets trading data to financial institutions. Google provided the prediction markets data in their search and finance section. Bloomberg and TradingView, these are very well-known financial data providers. They provided these prediction market data through API. The other large and well-known prediction market is called Polymarket. It is founded in 2020, and the person who founded Ethereum, Vitalik Buterin, is an investor in Polymarket. Right now, I think one of the Donald Trump's son also invested in Polymarket. So technology companies like this has gained mainstream support in the US. So the market broadly expects that regulation will become more favorable to companies like this. We call this company a decentralized leader. As of February 2026, it has a valuation of $9 billion US. It is based on the blockchain, and it is relatively open. And the blockchain it uses is called Polygon. It also has very good partnership that brings along users. For example, one of the largest blockchain wallet provider called MetaMask is its partner. And if you download the plugin, the Chrome plugin of MetaMask, you will be able to access prediction markets through just one click. That's how the smart partnership works to bring users to Polymarket. It also has many buyers of its data. In terms of news and financial data, it has ICE, NYSE. ICE also invested $2 billion as an equity investor, and it also buys data from Polymarket. Dow Jones, which is a well-known financial data company, it provides in Wall Street Journal, Barron's. These are two well-known publications in the financial space. It provides this data in the odds section in these two publications. Yahoo Finance use Polymarket as an exclusive data partner. Google also provides probability charts in their search. Substack is a well-known online data company. It provides live odds in these newsletters to the users. In addition, Polymarket also provides entertainment data to sports streaming. This company called DAZN. Another well-known entertainment company is Golden Globe. I'm sure many of you who watch movies, who watch TV shows would know Golden Globe. It provides real-time win probabilities. And UFC, NHL, these are very well-known sports leagues in the US. Polymarket data will help engage the fans in sports and entertainment. Polymarket also has very good suppliers for niche data. For example, for weather-related data, it gets it from Chainlink, which of course gets it from the National weather forecast agencies. And Kaido AI is another startup founded by a Chinese entrepreneur in London. It provides attention data primarily from the social media. Um, so basically, there are two major kind of social media data they provide. One is called mindshare. For example, will Anthropic's mention surpass OpenAI? So Anthropic and OpenAI are two large AI companies providing large language models, and it's they always compete head to head. So people might want to understand which company has a stronger mind share, basically their share of people's mind, in the current space. So there's an active market space for this. And also sentiment, for example, when Anthropic rejected the Department of War on their support for the war on Iran, OpenAI sign up for the contract. Will the sentiment towards these two companies change? So there's a good gauge of these sentiment in the prediction market space. So people bet on this, of course, with the objective of making money. There are also a few up and coming prediction market players. One of them is called Limitless. It is built on the Base blockchain. Base blockchain is created by one of the largest cryptocurrency exchange in the United States called Coinbase. Um, the interesting way of business is it allows ordinary users like you to create your own markets and invite your friends and your fellow students to bet on certain topic of your interest. For example, you can bet on certain events with regard to NUS or Singapore that students like you will be interested in betting on. And right now, this company is still relatively small. It raised $4 million and $10 million last year. So, as an early stage company in the blockchain space, as a user, you can also use it. And then once your data is recorded on a blockchain, in the future, the company may give you free money. So that's the meaning of airdrop. Airdrop basically means free money because you are an early user and the company want to reward you. Another company is called Azuro. Azuro is a software provider. They basically coded the prediction market software, and they are selling the software to other businesses who want to launch their own prediction markets. So if you want to run your own prediction markets, you can check it out and then build a website, and then the Azuro provider will be the back end for the functionality of prediction markets. So the business model of prediction market is quite straightforward. First of all, you can have direct users. For Kalshi, because it's regulated, every single user must be KYC. The meaning of KYC is know your customer. Basically, it means you need to provide your identity information to the platform. And these direct users can contribute to betting revenues, and then they will pay fees if they win the bet. You can also have indirect users through partnerships with larger companies like Robinhood, MetaMask. These are also, ways to engage more users, and the users will contribute, betting revenue and fees. And as I said just now, you can also engage large organizations. These companies will pay to get your data. And because the data is proprietary data, so there's no way that anyone can, steal that data or replicate that data. That's impossible because it is data generated on your own platform, on the user's betting activities. And these two type of businesses, the first one is a marketplace business because users bet against each other on your platform. These kind of marketplace business typically have very strong network effect. If you have never heard of network effect or if you don't know what it is, just ask ChatGPT, and it will tell you that this is a very strong business because more users will bring about higher liquidity, and higher liquidity is going to bring more users. So that means the bigger you are, the more user you have, you naturally have a competitive advantage against any newcomers or incoming competition. The second reason why it's a strong business is because it has a moat built by proprietary data. As I said, the data came from, or the data is generated from betting activities of your platform. So the user, the buyer of the data, company like Google or Bloomberg, it's very difficult for them to switch away from you and try to get the data elsewhere. This is also a very strong competitive advantage. So here are the betting segments. We can see that the largest one is sports. Sports betting has been quite an old industry in the U.S., especially also in other countries. A famous example will be NBA. You can bet on the match winning, which team is winning on a particular match. In this case, I'm giving an example of San Antonio Spurs and New York Knicks. Politics, will Iranian regime fall by June 30th, 2026? This is a very controversial and popular question that people are asking right now. Cryptocurrency, will Bitcoin price go up or go down in the next 5 minutes? Economics, which company would be the largest company by market cap at the end of March 2026? Could be Nvidia, could be another company. You can go and bet on it. Will crude oil price go up or down on March 2nd? This is a finance question. Also, there are smaller segments like weather. What is the highest temperature in New York on March 1st? Is it 38 or 39 Fahrenheit, or there's another temperature? Culture is how many tweets will Elon Musk tweet? Is it between February 24th and March 3rd? Is he going to tweet 220, 230? This is another culture-related questions. Mentions, what will Hillary Clinton say at testimony? So if you follow politics, follow the U.S. news, you know that Bill Clinton and Hillary Clinton will call to the Congress to testify for the case of Jeffrey Epstein. Technology. So DeepSeek is a Chinese large language model company, and people will be predicting, when is the V4 be released? Will the V4 model be released by March 15th? Because it is broadly anticipated that V4 is a very strong model that can compete with Anthropic's Opus 4.6 as well as Codex for various capabilities. So this is a bar chart that give you an idea of the top 3 traders' monthly total earnings by category. So all of you are fintech students. So if you're interested in trading on the prediction market and do it as a career, this is how much money you can earn every month. So if you choose the bigger segments like sports, politics, crypto, this bar is a measure of the total earning by 3 people, the top 3 traders. So each person, for example, in the sports section, each person makes about $800,000 a month. In the politics section, each person makes about $300,000. And in the crypto section, each person makes about maybe $200,000+. So these are pretty significant. Yeah, if you become the top trader in this category, the compensation is way higher than if you get a job somewhere, right? But for the smaller segment, for example, for technology, each trader only makes $5,000, which is similar to, working as an engineer or working as a finance professional somewhere, right? So it depends on which segment you focus on. Yeah. This is the volume. You can see it's similar. The only exception is crypto has a higher volume. And this is an interesting chart. The profitability. This is my own measure of profitability. Basically, it divides the total earnings you saw just now with the total trading volume. And you can see the top 6 sections generally have relatively low profitability of about 1% to 3%. And the smaller segments, culture, mentions, tech, have significantly higher profitability. You can think about the reason why, and we can discuss about it in the Q&A later. There's no definitive answer to this. There's only my guess, so I can share with you my guess, and then feel free to have your own guess. After you've looked at the more information. So my guess is that the ones with relatively smaller profitability are probably more data-driven, automated betting. That's how you can achieve very high volume. But then your profit, the scale of your profit is relatively small given the volume you trade. But for culture, for mention, for tech, is probably more human, human manual trading. In that case, usually you cannot trade a lot because it's manual trading. But some people who are good can still make very good money because they are correct in their bet. Next, I will share some agnostic trading tactics. The English word agnostic basically means you don't need to understand the fundamentals of the markets. For example, if you're trading sports, it doesn't mean that you have to be an expert in NBA or you have to be an expert on NFL. I know a lot of people outside of the United States don't really watch baseball or American football that much. That's why I'm sharing with you some agnostic trading tactics. You don't need to know sports. You don't need to know politics before you can trade. So the first one is called binary or multi-outcome arbitrage. If you are familiar with trading, you know the word arbitrage. Arbitrage basically means trading with very low risk or trading with very high probability of winning. That's called arbitrage. And here in prediction markets, usually the outcome that you'll be predicting is a binary outcome. Basically, it's a yes or no, or it's either team A wins or team B wins. So that's usually a binary outcome. And sometimes there's multi-outcome. But anyway, regardless of how many outcomes there are, the total amount of money, betting on these outcomes should add up to $1 because that's the theory of prediction markets. However, the actual price of the yes vote or the no votes fluctuates based on market dynamics. So sometimes you can have this situation where the yes is selling at 55 cents, the no is selling at 43 cents, and the total cost is 98. That means you can vote for both. You can buy both. You can buy yes and buy no together, which means regardless of the outcome, your total cost is going to be 0.98. And then, as I said, theoretically, these will eventually resolve to $1. So the total of these yes and no will become $1. Basically, if the outcome is yes, the 55 cents will become $1 and the 43 cents will become zero. So they will eventually add up to $1. So you already bought both of them for only 98 cents. So you will make 2 cents guaranteed once you wait until the market resolves. So this is called binary multi-outcome arbitrage. Obviously, it's a very very well-known idea. Everybody knows. So you need to have, very good execution speed, very efficient detection techniques in order to make money. But because prediction markets is a relatively new field, I would say the opportunity is still there. If you're very good at building computer programs, you can have a try. Yeah, and I'm sure there are a lot of people who try to do the same thing. Yeah. The second one is called endgame sweep. So when the particular event is 99% certain, that means for example, if you're watching a basketball game, within the last 1 minute, most people wouldn't expect the game to change anymore because the score is probably not close to each other. And the retail traders would typically want to sell at 98 cents or 99 cents because if they wait for the market to resolve, it's going to be much longer. Maybe they have to wait for a day or 2 days. Well, if they sell the token right away, they can get their money back right away. So some people want to sell at a discount. For example, if they are winning theoretically they will be getting a $1 payout, but in order to get the money early, they're willing to sell cheaper. So they want to sell at 98 cents or 99 cents, so that there will be buyers who want to buy it. And if you have a lot of money, people call you a whale. You can sweep these shares, at 98 cents or 99 cents, because for sure that you can sell them at $1 after 1 day or 2 days, and there's no risk in this because the outcome is almost there already. And for example, if you come up with $1 million capital to do this, and you make 1% return every time, and then typically it's the resolving only takes a few hours, so you make 1% in a few hours with nearly zero risk. So sometimes these can be quite competitive and attractive as well. So this is another strategy people use. The third one is called negative correlated hedging. Basically, usually for the same event, there are usually two markets. So one is basically the for example, this one is happens at two prediction markets. At the poly market side, the Federal rate cut is at 60% probability, and on the Kalshi side is at 55% probability. So you basically buy at where a Kalshi and sell at the poly market. So you buy yes on Kalshi and then buy no on poly market. This way you are perfectly hedged. So no matter the Federal rate cut is at what percentage, you already have a profit because you're going to you buy the cheaper one, you buy the yes on the cheaper one, and then you sell the no at a more expensive one. Basically, they are equivalent, and then you basically lock your profit because the price discrepancies between the two platforms. The next one is market making and liquidity farming. This is very traditional trading. You can do the same thing at other markets like stock. You can do it at crypto. Obviously, you need some techniques for this kind of trading. But the fundamental idea is because you provide liquidity, and you should get rewarded. Most of the time you will be the seller. For example, you provide the selling order at 51 cents, and you provide a buying intention at 49 cents. And then if someone buys from you at 51 and someone sells to you at 49, you naturally make 2 cents on these two trades. So hopefully you don't take directional risk if people are buying and selling all the time. But if you always get hit on one side, then you might have a directional risk. This is what people call toxic flow or adverse selection. So there are some techniques required for this kind of trading. Yeah. The next one is called latency and speed arbitrage. So because the prediction markets are usually related to other markets, for example, for crypto, the poly market crypto odds usually lacks the spot price in other markets, such as Binance or Hyperliquid, by about 1 second to 5 seconds. So if you monitor the Bitcoin price in larger platforms, and then that the prediction markets are slower, so you can try to be faster than them. And this way you have very low risk in your trading. And usually, because it's a well-known idea, so a lot of people would do this. So you need to make sure that you use low latency APIs so that you can bypass the slower websites. A lot of users will be trying to do the same thing on the website. If they're not tech savvy, they don't know how to code, you have some kind of advantage over them. But any of these ideas would have competition, so be prepared. The last idea is you can also try to exploit the design flaw. So poly market, for example, because they are blockchain based, there is some design flaw. For example, the order matching is off chain. So let me explain what is order matching. Order matching basically means if there's a buyer, let's say I'm the buyer and you are the seller, in order to match our orders, this has to be done relatively quickly. And in order for this to be done quickly, Polymarket decided to do this on their database. So database, as you know, is a very fast software. So the order matching is done off-chain. Off-chain basically means not on the blockchain. An example is database. Database is not on a blockchain. And however, the settlement is on-chain. As we all know, any transaction on the blockchain is more trustworthy. People call that code is law. If it happens on blockchain, is transparent, is publicly observable, is more trustworthy, is more easily trusted by the user. That's why they decided to have the settlement on-chain. The word settlement, if you're new to finance, basically means, let's say I'm the seller, you are the buyer. Settlement basically means if we transact with each other, I will give my yes token or no token to you, and you will give your money to me. That's called settlement. So the settlement happens on the blockchain. And because the order matching happens in the database and the settlement happen on chain, there's a time gap because you cannot guarantee these two things happen exactly at the same time. There's always a time gap. What I can do if I want to exploit this flaw is I can buy yes and no using two separate accounts. So let's say I have my A account and my B account. Both of them has money inside. I'll use A to buy yes. I'll use B to buy no. And I'll buy it right before the expiration. For example, let's say I'm betting on Bitcoin price going up in 5 minutes, right? So right now, let's say it's 2 p.m. In 5 minutes, it's going to be 2:05. So I'm going to buy exactly at 2:04, maybe 55 seconds. So that means there's only 5 seconds before the expiration. So, with 5 seconds, I almost know the price, right? So it's almost certain, whether the price is going up or going down. And if, within, let's say if in the 5 minutes, the price is almost the same as 5 minutes ago. So it's very uncertain, like whether it's going to go up or go down. This is a situation that could happen because, every hour you have 12 chances of betting on this. Every day you have, 24 hours. So there's a very high occurrence of these events. And, if you have these 5 seconds ambiguity that could potentially happen, you have a very good chance of winning a huge amount of money. So because after the result is known, I can cancel the losing side because I bought both, right? So my account A bought yes, my account B bought no. Because the time gap between off-chain order matching and on-chain settlement, I can cancel the losing side. For example, I bought the yes and no at 2 p.m. 4 minutes, 50 seconds, or 55 seconds, right? And I have 5 seconds to decide on whether to cancel my losing side or not. The transaction that is already matched on the database, these are not cancelable. You cannot cancel it. It's not allowed. It's already transacted, okay? It's already happened. But the on-chain settlement takes some time. It's not happening immediately. What I can do is I can offer a very high gas fee. The gas fee is basically, it's like lubricant to on-chain transaction. The more money you're willing to pay, your transaction has higher priority of getting transacted. So what I can do is, if I want to cancel my, yes, basically I have my wallet A or account A buying yes. What I do is I'll pay a very high gas fee to remove the money in my account A. And I will make sure that my removal transaction takes higher priority than the settlement transaction that Polymarket is trying to do. This way, when Polymarket try to settle by deducting my money from my account, there's no money because I already removed my money before Polymarket was able to do it. So this is a design flaw by Polymarket. And you can still try to do this, but make sure that you don't get caught by the police because it's obviously not legal to do this. But there are people who do it. And the reason why they can do it is because Polymarket is anonymous. you don't need to provide any identity information to the blockchain. Nobody knows who you are, and that's why a lot of these controversial trades are all done on Polymarket. For example, right before the capture of the Venezuelan president, uh, there was a huge bet on Polymarket betting the Venezuelan president Maduro will be captured. Maduro will be captured. Many people think that this is obviously insider trading. There must be someone who worked in the U.S. military who obviously knew about this, and then he was betting on this. So a lot of anonymous transactions are happening this way. Yeah. Um, if we look at the global markets for prediction market business, the U.S. is obviously the leader, and um, right now, Kalshi and Polymarket already has some version of their business approved by on the federal level, approved by the CFTC, and they are classified as a designated contract market, and they are fully licensed on the federal level. However, on the state level, there are 3 states in the U.S., namely Nevada, Massachusetts, and Tennessee. The state gaming board, basically the state that governs gambling, doesn't agree that these kind of betting, can only be approved on the federal level without getting a state level approval. So there are court cases currently ongoing because these state regulators are contesting on the federal regulation. In some other markets, we see relatively open and they can be regulated and allowed in the country. We've seen Japan, Brazil, the Philippines, Thailand, India, Switzerland, EU, UK, Hong Kong. Some of the markets are still open. Open means the government doesn't say anything, so you can do it. And some markets already require you to get regulated, to apply for some license before you can do it. But simply speaking, it is either open or regulated. It is allowed. And there are also some other countries who have strictly banned this. We have seen China mainland, France, Italy, Netherlands, Singapore, Hungary, Portugal. These are countries that have already officially not allowed prediction markets to operate. In the future, I would expect a broader financialization of more data in our daily lives. We have seen weather data, geopolitical data, social media data, technology trends. These are all being financialized, which means you can bet on them if you know it better than other people. And I'll also be seeing prediction markets growing beyond the United States. Right now, if you look at the topics or the markets, the segments, they're all pretty US centric, like NFL, NBA, UFC. These are like they have a pretty large following in the US markets. I would believe that in the future, there will be prediction markets coming out of Asia and other parts of the world, where people also bet on the events that they are interested in. And also there will be more clear regulations in more countries. With the development of the market as the companies grow bigger, I'm sure we'll see more regulatory adoption in other markets beyond the United States. So this is where you can find me. Find me on LinkedIn. So you can scan the code or follow me on search for my name on LinkedIn. Yeah. So that's all for my presentation today. We can open for questions. Let me just stop my screen share.
Please unmute yourself, or you can post the queries in the chat.
Yeah, so you can type your question in the chat, in the group chat in Zoom, or you can just raise your hand and speak up. Yeah.
Maybe let me start the discussion. So, for the prospective interns, what are the kind of technical skill set that you are expecting from them?
Sure. That's a good question. So in the past, we have had students from the fintech program working for us as interns, and we had very good feedbacks for these students. And students learned quite a bit from the job, and we also hired some person from the program before. The typical work that interns get to do are mostly uh, we call that quantitative development. Basically, helping to build different trading functionalities in our software, and some students get to work on research topics, analyzing data, drawing charts, try to derive more insights, and finding the optimal trading parameters. These are typical work that interns get to work on. Um, with the advancement of AI, I think the nature of the job would change because a lot of the development work would be just undertaken by AI. Typically the coding capability, the raw coding capability that an intern could demonstrate would be not as good as what AI is able to handle. So rather than having a person doing that, we would probably just have an AI doing it. And that's why I think in the future, an intern needs to have more of their time spent on you know understanding the market and proposing ideas rather than doing more hands-on coding. I think in the future, as AI advances into our daily life, not only for software development, for other aspect of our jobs, for example, for operations, marketing, many of the segments of the job will be replaced by AI. So I think there's a fundamental shift in how interns or internships will be structured in the future. We are also in the transition phase. For example, the AI coding thing only started around the end of 2025. So we're only 2 months into the space, and but we already see very obvious success in utilizing AI. So I think students graduating this year should quickly equip themselves with familiarity with coding with AI. That will make them much more efficient. When they work on real life jobs. I think that's something that students should be prepared. Um, you know, Regardless of which direction of their career they're pursuing.
Okay. Yeah. Thank you. It's quite an informative uh, yeah, answer.
Yeah,
So
I guess
building core.
prediction is a relatively new concept. I think a lot of students probably have not heard about it, so
Yeah,
it's a brand new topic.
yeah. And we have mid exams running now, so probably they're in high stress point now. Probably, yeah,
Okay, that's fine. Yeah,
yeah.
I fully understand. So I hope it's an informative presentation to so that the people can pick their interest, and then they can do more research if they're interested in a topic like this. Yeah.
Yeah, it's quite even I learned many things from this
Mhm.
presentation. Yeah.
Sure. Sounds good.
Yeah. Yeah. So if there are no further queries, maybe we can conclude the session. So I would like to thank the speaker, Spencer Fan, for spending his valuable time and sharing very interesting insights about this space, and also sharing his perspective on the future requirements, like the expectations from the internship. I think that is more valuable. So thank you very much
Thank you very much,
for
Denzel.
the excellent session. Looking forward
Okay.
to working with you again. Yeah.
Sure. Thank you, Professor Rajendra. Thank you, Geraldine. Yeah, it's a
Thank
pleasure to be
you.
here.
Thank you. Thank you very
Thank
much.
you.
Bye bye.
Bye bye.
Bye bye.